So I think 2015 clearly was a year of expectations. We expected that the new government would be able to come into action much faster. However, I think the challenges of coming out of a tough last 2 years, 13 and 14, are taking longer to resolve, especially on the economic front and the monetary front. So all said all, I think the long-term opportunity remains intact of we believing that in India is a great market to be putting capital to work. But in the short term, we will continue to have some challenges and headwinds that companies will face and will have to prepare for. So we invest across broadly what we call consumption sectors. And this for us, the consumption definition is very wide. It covers everything from your consumer businesses to financial services companies to telecom services companies to any kind of B2C type of an activity. We also have a strong focus on things like education, healthcare, even businesses such as industrial companies which are benefiting from the whole nation building, and businesses which are essentially servicing global markets, whether it be on the services side or on the manufacturing side. We've invested in over 28 companies over the last now nearly 9 years that we've been operating in India. So we closed a third private equity fund. It was a $730 million fund, and that was closed in September last year, and we've started deploying capital from there. 2016 will continue to see strong investment flows from private equity funds. The fundamentals of India are very strong, and I think the 3Ds, democracy, demography, and demand, play a very important role in the long-term growth that this country offers. I guess the government has already shown a lot of intent and made a lot of announcements in terms of simplifying tax structures, both on the direct and indirect taxes. GST, which has been long awaited, it looks like finally we will see some closure on GST in 2016. And again, depending on what rate, but we believe if it's where we are seeing the rates of GST settle, likely to be in the 17-18% region, should be a good beneficial impact for the economy as a whole. And finally, I think just from an investment, a foreign investment perspective, we do want to see clarity around treatment of foreign investors and a stability around that, so that we are long-term investors. We invest money for 5 to 10 years, and we would like to see a stable tax regime. If you ask me, India is in a relatively better position as compared to a lot of emerging markets. We do offer very strong growth as an economy. The real decision for investment dollars flowing into India will be more relative than absolute in my view. Global funds rebalancing the portfolios, and then within the rebalancing portfolio deciding how much they want to really allocate to India versus other geographies. Coming specifically to fundraising activity, we do believe it will continue. However, it will be a very measured fundraising activity. It is clearly there is I would say, consolidation where fewer GPs will be able to raise larger amounts of capital. We continue to see a strong trend towards exits. There is a fair amount of work which is already underway. As you know, there's a lot of capital market activity which has happened last year, and there are a lot of private equity funded companies which are now going to hit the capital markets in 2016 also. So we do think that exit trends will continue, and it's actually positive for the industry as a whole.